Everybody, this is Osprey from mychartcoach.com. And in this video, we're going to take a look at the bear, the inverse ETFs. So all these ETFs are bear ETFs, so they're going to be shorting the different sectors or commodities. And yes, with the markets being whipsaw today, they were on that huge multi-day, 7-day run, heading into the however many days that was, heading into the Fed minutes, and then they ran up after the Fed minutes, and then the bottom dropped out, and there was that huge pullback from high of day to low of day within a 2-hour period, and many times when that happens, that signals more downside risk. So this cool be a cool down for the markets. The last time that the markets cooled down, had that giant pullback, all these ETFs that I'm going to show you had nice percentage gains. So keep an eye on them. If the markets do cool down, this could be a place to look to find some nice trades. And keep in mind, most of these are do trade options, and so this is a great way to get some extra, to be a good way to find some beta on a down day. So let's look at SPXS here. Okay, this is This is the S&P 500 bear 3 times, and you can see it's heating up. It's back above 50 on RSI. So it came down. This is the big run I was just talking about. When the markets tanked, notice how this ran all the way up here to 34.50 from down. Started at 24.50, so it had this giant $10 move, huge gain for call options, and then bam, it pulled all the way back down to the middle Bollinger Band. The middle Bollinger Band is currently holding at 27.67. As long as that holds, the uptrend's intact. And now today on the close, it closed above the 50-day simple moving average at 28.22. So if you see SPXS above 28, that signals to be long, riding calls, signals more upside potential, and then we'll be looking for a move back up to the 100-day simple moving average at 31. If it drops below the middle Bollinger Band and the 28, 27.50 to 28 support level fails to hold, that would signal downside risk. Okay, let's look at TZA. This is the small cap bear 3 times. So if the small caps are under pressure, if the Russell 2000 starts to pull back, then this would be a place to look to get some percentage gains. The chart's trying to heat up here. It's the same pattern. Notice how it broke out on when the markets tanked, and then it ran all the way up to 14, up to that 200-day simple moving average, and then it pulled back, and it's been holding the 50-day simple moving average, the green line, and the middle Bollinger Band, which is the 20-day simple moving average. As long as those levels hold, the uptrend's intact. Now, what you want to see if you're trying to be bullish on TZA, if you're trying to if you're done with the puts, ready to ride some calls, break above EMA's 8 here at 12.29, that would signal that the chart's heating up. And then once it's back above the 100-day simple moving average at 12.61, it could really get moving. So keep an eye on that level. Okay, let's look at TECS. This is the Drixon Daily Technology Bear 3 times. So if Apple and Amazon and Netflix and Netflix and Amazon are both at those really high levels, if all the tech stocks that are really cooking right now, if they take a breather, then TECS should heat up. Okay, so because this is shorting the tech stocks, and so notice it had a major correction. I mean, the Nasdaq has been the strongest with the tech stocks being on a major rally. As you could see, this had ran up here above 760, and then it's just this is reflecting the inverse of the strong move that stocks like Amazon have made. And so look at the big pullback. So it fully corrected all the way back down to 550, and it's below EMA 4. If you see TECS close above EMA 4 at 581, that's going to be your clue that it's heating back up. It's been below that level since the close below on the 12th. So that would be a bullish change in trend. When it closed above EMA 4 back here on February the 3rd, that was the big signal that a new uptrend was starting. So that's what we'll be looking here as well. It has to get above the middle Bollinger Band and that 50-day simple moving average at 627 to get a new uptrend going. Okay, let's look at FAZ here. So if the banks and the financial sector is under pressure, then this Drixon Daily Financial Bear 3 times would be a place to find some percentage gains. So notice how it pulled back as well. It had the big rally. Had the giant volume, ran up, came back down, and it's trying to hold the middle Bollinger Band here. So if it can stay above 1087, if it can hold 11 here, 1087, that's going to signal that this uptrend's still intact. And then if you see FAZ above 1115, above the 50-day simple moving average, that's going to be your big signal that it's back in play, and it could run back up to that 100-day simple moving average to test that 12 resistance level. Okay, now let's look at LABD. Okay, yeah, so this is the Drixon Daily S&P Biotech Bear, and so yeah, so the biotechs have been doing pretty good. I just posted a bunch of healthcare and biotech stocks that had nice uptrends, and as you can see here, the biotech bear is trying to get a new uptrend going. If it can hold that middle Bollinger Band at 340, then that would be a signal a new uptrend has started. You can see all these candles are above that dotted purple line, which is the middle Bollinger Band, and then what you're looking for is a move up to that 100-day simple moving average at $4. As long as the middle Bollinger Band at 340 is playing, the biotech bear is in play. Okay, now let's take a look at energy. This is the Drixon Daily Energy Bear 3 times. And so notice that the Energy Bear has been rocking it out. So check out how it has a really strong uptrend. Notice how Energy Bear did not correct. So it broke out as the same time as the market, but check out the bullish divergence. You know, it ran up to the high and it pulled back and it held support. You know, these other stocks, I mean, especially if you look at FAZ, look at the technology, look at TZA, you know, SPX, you know, they had much bigger corrections, but the Energy Bear really held up. It just kind of went into a sideways channel here. So, you know, the Energy Bear is strong. You know, oil is under pressure. So what it has to do is break above the 200 and 300-day simple moving averages. If you see it above 1161, above that 200-day simple moving average, that's going to be a signal that it's ready to break out higher. It's currently hitting this multiple top level here, and so if it can, 11 is the huge resistance level. So if you see ERY close above 11, that's going to be your big clue that it's ready to head higher. If you see it drop below 10, that's going to be your big signal that it's cooling down. So above 11 signals to ride the bear higher, drop below 10, and that's going to be a signal to jump on the bull. Okay, so let's look at GASX. This is the natural gas related bear 3 times, and so I wanted to show you this one. Even though it's thinly traded, it only traded 18,000 shares. Okay, so this is the natural gas bear 3 times. So it's you know, it's shorting natural gas, right? The natural gas stocks, and notice how it was up 8%. Super light volume, like I said, but has a very similar chart to ERY. You know, it looks very similar. You know, ERY broke out just like GASX, GASX. It ran up, hit that top, has a sideways channel. If it can get above that 200-day simple moving average at 32, if you see GASX above 32, that's going to be really bullish, and so it wants to head higher, especially if it gets above 33. That's the high close, the recent high close. Now look at DGAZ. A lot of people trade DGAZ, much better volume, right? 3 million shares. I mean, this says this is the velocity shares 3 times inverse natural gas, right? So you would think that it would be very similar to GASX, right? Because they're both natural gas related. You know, bear 3 times. I don't know if I'm missing something here, but yeah, this, you know, check out the performance, you know, up 8%, down 2%. Not sure why. You know, you'll have to read more about the, you know, this ETN, GASX, you know, so just basically the bottom line is DGAZ is not performing the way GASX, even though it has much better volume. And so DGAZ is pulling back. I've been posting charts on UGAZ, and UGAZ has really been heating up. And so, you know, UGAZ has the inverse of this. It's been in a downtrend, and it broke above. Like UGAZ is like right here on the chart. You know, it had been in a downtrend, and then that's the natural gas bull, and it has closed above EMAs 4 and 8. And so the natural gas bull has been heating up, while the natural gas bear DGAZ has been cooling down. Notice how it's below the pink and green line. So if you see the natural gas bear back above 30, above EMA 4, that's going to signal that the bear trade's back on. Okay, so it's currently trying to hold that 50-day simple moving average. Above 29 is bullish for the bear. Below 29 would be bullish for UGAZ. Okay, I hope that wasn't confusing. Okay, let's look at EDZ here. This is so now we're going to switch it up a little bit. We're going to look at emerging markets, Russia, China, and Brazil. Let's take a look at their bear ETF charts. Okay, what's happening with them? So everybody's been talking about emerging markets for 2018. That's the place to be. At least a lot of people have been saying that. A lot of financial, you know, people in the industry. And so check it out. It had a nice run as well. Went up to the 100-day simple moving average at 929, where it topped out. And it came back, and it's currently below the middle Bollinger Band, you know, because the emerging market bull has been heating up. Now, if you see EDZ back above the middle Bollinger Band at 782, above $8, for EDZ, that would be a clear signal. Okay, it's heating up again. It's back in play. And then if it gets above that 50-day simple moving average at 840, that would be major red flag for emerging markets, and that would be very bullish for EDZ. Okay, let's look at RUSS, RUSS. This is the Russia bear 3 times. And so Russia has been really bullish. You know, it had been heating up. All right, so check out how the Russian bear took off. It ran up to the 100-day simple moving average. Has the the same chart as EDZ, and then it pulled back, but it's really well below that middle Bollinger Band. So the Russian bull RUSL is really that's the inverse of this. That's the bull trade. It's very, very strong right now, and so what the bear chart has to do, it has to close above EMA4 at 17. If you see RUSS, the Russian bear, above EMA4, that's going to be a bullish change in trend. When it closed above that level on the 3rd, see this candle here, that signaled the start of this uptrend. And so that's what you're looking for if you're looking for the bear trade. And then if it gets back above the middle Bollinger Band at 1771, that's when a new uptrend can begin, and it can run back up to that 50-day simple moving average. Now let's look at the China bear 3 times. So this is YANG. So this is shorting China stocks, and notice when the markets tanked, it ran, and so because now you can see how the United States, China, Russia, Brazil, all the emerging markets, they're all intertwined now. It's a global economy. Everything's moving together. Okay, so keep that in mind. And just like how I showed the futures earlier, I posted some futures information. They're red tonight. The whole planet is red, and so yeah, things move in unison now across the planet. And so now we've got the China bear is down here, and it's actually holding the middle Bollinger Band. So the China bear is much stronger than the Russian bear, and so it's still in an uptrend here. If it stays above 450, that signals the uptrend's intact. And then if you see it get above 480, that would really be cooking. It'd be back above EMA's 4, 8, and 13. And then the 50-day simple moving average is the key level to turn into support. Above 510 for the Russian bear or for the China bear would signal that this uptrend is really intact and could head back up to that 100-day simple moving average. And finally, I'm going to leave you with the Brazilian short here. This is ProShares Ultra Short Brazil cap, MSCI Brazil capped. So basically, if you're looking for a way to short the Brazilian markets, BZQ is something to take a look at. It's been very similar pattern here. Brazil has been strong, and you can see here when this bounced, it barely got above the middle Bollinger Band, and then it pulled back. So Brazil was showing much greater strength. You notice how when these other all these other ones that I showed you, they ran up to that 100-day simple moving average. Brazil didn't even get to the 50-day simple moving average, and it pulled back. So it shows you Brazil is a lot stronger. And so you'll know if Brazil is getting weak by whether or not BZQ is heating up. And so if it closes above EMA4 at 694, that's the pink line. That's going to be your first clue. It's forming a double bottom right now, and so the double bottom, is signaling that it could possibly bounce here. Now, if it drops below that 650 support zone, that's going to signal downside risk. If you see BZQ back above 712, above $7, that's going to be your big clue that it's back in play. Okay, thanks a lot for checking this out. I'm always trying to help stay one step ahead of the herd and try to educate at the same time and present you with good plays on a daily basis. If you like this information, come check out our chat. We're posting this good information around the clock, 24 hours a day. It pays to be in the chat. It's a very small fee, 50 to 60 cents a day. It costs hardly anything to be in there, and it'll be very well worth your while. So please come check it out. Okay, thank you. I'll post the link below the YouTube video.